Hello everyone, welcome to Indie Accountant. Today we are going to discuss Angel One, a stock which has recently soared almost 20% in a single day. What pumped this ride? Is there more to come? Let's discuss every fucking thing in this video. Around August, I had written a blog on medium.com, link in the description. At that time, Angel was around 2100. I wrote up an entire thesis on why the stock was way cheap and a great value investment. It got no views, but the stock soared more than 50% since then. So I am making this video so that people don't miss out on why this is such a great stock yet again. Hope this finds more viewers. Please do share with your stock market bros. I would not say it is as cheap even today. It actually went up quite a lot, but I had tell you the zones where you could think of buying. I still believe the stock can give even more returns and has much more to ride. So let's get right into it. Let's come to the charts first. As you can very well see, the stock moved almost 20% on a single day, and since the time I wrote the blog, the jump is almost 50%. Let's measure with the trading view chart. Well, yeah, 48% to be precise. Pretty good money, isn't it? Let's understand the technical part of the thesis a little here. Since the last year, the stock has been on a very nice uptrend. The trend took the stock up almost 3 or 4x.
But this trend was broken at the beginning of this year. We all know about all the new rules that SEBI had announced to lower down derivatives trading in India and how it would affect the revenues of brokerage firms. The impact of such panic can be seen very well in the charts. The stock went from almost 4,000 to about 2,000 in just half a year. This created an apparent downtrend on the stock. But at the end of this downtrend, volumes had absolutely dried up and signs of a reversal could be seen. Now was the time to think whether or not to buy the stock. This meant answering a simple question. Was the panic in the markets really logical? Or was it simply letting us buy a good stock for cheap price? For one thing I knew for sure, derivatives trading volumes were nowhere to go no matter how much SEBI tried. People are addicted, much like gambling. These things take time to go away. And the kind of measures that really need to be taken for it to be lowered significantly? I really doubt that SEBI can do that to such an active market that is used to represent our economy on a day-to-day basis. It is not a good thing for sure, but the best we can do about this is make some money. So as I already said, the stock has gone up by a lot and this might not be a great time to enter. But you should keep it on radar and know the levels. As I have drawn the levels in the charts, 2750 and 2100 will act as extremely powerful support zones. If you get the stock at these levels, just load up. Where the stock is at currently is a previous zone of resistance. So if you are too impatient and thinking of buying right now, do not. Wait up. Let us see the fundamentals behind this company and understand if it really is a business we want to invest in. For this, we would be using screener.com, as I always do. Angel One is a diversified financial services company, but as we all know, its main source of revenue has always been stockbroking. The market cap is 29,000 crores and the PE ratio is 22. Honestly, a business with such profitability and a PE of 22 in such heated up markets feels like a gift from God to a value investor. Apart from broking, Angel One's service offerings include investment advisory, research, margin trading facility, and such related services. The total client base is 22 million and gross client acquisition per year is 2.9 million. That is quite impressive. This means a growth in clients by more than 10% every year. Talking about market share, Angel One accounts for 15% share in both of India's total Demat accounts and NSE active client base. Thereafter, broking services contribute to 65% of the company's revenues. It is followed by interest on deposits. This is basically the money that investors deposit with their broker, and the broker earns interest on that. Now you need to understand that within broking services, 85% of the money comes from derivatives trading. That is almost all of the company's revenues. The huge fall in the stock came majorly because this is the same revenue that is at risk as per the recent developments at SEBI. If SEBI really takes some absolutely drastic steps, this stock may actually go to zero. You should keep that risk in mind before investing a penny on this stock. Now, what do I think? I think SEBI will take a few regulatory steps to lower the volumes, and it would work a bit too. But the insane volumes that exist today are nowhere to go even after such measures. In fact, it might just grow, keeping in mind the growth levels we just saw. Let us come directly to the profit and loss statement. You can see that the company earned north of 1,300 crores as profits and booked sales of more than 4,000 crores during the last year. Let me remind you, we are talking about a company selling for 22,000 crores. If you do not find it cheap even now, you're simply too pessimistic about the F&O scene in India. Look at the numbers, just too good. Coming to the balance sheet, they have reserves of around 5,000 crores and long-term debt of around 3,000 crores. The huge amount of other assets in the balance sheet represents the client deposits, and we got a good amount of liabilities against that as well. so nothing to be too happy about. Overall, I would say I really like the stock, and I do feel that it has the potential to even be a multi-bagger. However, it would have an extreme dependence on the regulatory developments. So if we get SEBI to cool down a bit, we got a really great stock with solid fundamentals. Let us come back to the charts and see how we can plan to enter the stock and what levels are good for buying. As I already said, look out for buying opportunities below 2750. Also, though very unlikely, if some huge crash happens and by any chance you get the stock for 2100 again, just load up as much as you can. But since that is unlikely, I would suggest wait for 2750. The stock is at a resistance now and it would at most probability fall till 2750. Once you enter below 2750, the targets can be very good. Beyond 4000 for sure. And beyond 4000 is uncharted territory. It would be a blast. I would not recommend any stop loss at this level, because if by God's grace it fall to around 2100 again, I would be loading up on the stock big time. And same targets from there as well. Hope you liked the video. Happy investing. Do not forget to like, share, and subscribe. Also comment any doubts or suggestions. Thank you.